Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called Harmonic Symmetry Reversal. This is a pattern-based reversal strategy built entirely from price swing structure, using the classic measured move idea, often written as AB equals CD. Over the next few minutes, we'll unpack how the strategy reads swing pivots, how it projects a symmetric completion point, and how it waits for a rejection candle before acting. We'll walk through the code, illustrate a long and a short example on a chart, and keep everything educational. Let's get started. So what does this expert advisor actually do? Harmonic Symmetry Reversal is a counter-swing, reversal-style strategy. Instead of chasing momentum or reading an oscillator, it studies the raw shape of price. It looks for the well-known measured move pattern that many traders describe as AB equals CD, where the market unfolds in two symmetric legs separated by a countertrend retracement. The engine tracks confirmed swing pivots and collapses them into a strictly alternating sequence: a high, then a low, then a high, then a low, and so on. It reads the last three of those pivots and labels them A, B, and C. From those 3 points, it measures the first leg, from A to B, then checks that the retracement from B to C is healthy, neither too shallow nor too deep. If that structure holds, the strategy projects a fourth point called D, placed so that the second leg, from C to D, mirrors the length of the first leg. In other words, the move is expected to complete symmetrically. Around that projected D level, the strategy arms a completion zone scaled by the average true range, so the window automatically widens or narrows with volatility. It then waits. It does not act the moment price reaches the zone. Instead, it requires a bar that actually tags the zone and then closes back through the completion level as a rejection candle, confirming that the swing appears finished and price is turning. This approach is best suited to traders who prefer structure and patience over frequent signals. It naturally fits liquid, mean-reverting instruments such as major currency pairs or gold, typically on the 15-minute through hourly timeframes, though it runs on whatever timeframe you attach it to. As always, remember this is educational information only. Trading carries real risk, and losing trades are a normal part of any strategy. Nothing here is a recommendation or a promise of any particular outcome. Let's walk through the mechanics step by step. First, the strategy identifies swing pivots. A bar qualifies as a pivot only when it is higher or lower than a set number of bars on each side, by default, 3 bars left and 3 bars right. Those confirmed pivots are then collapsed into a clean alternating sequence, so we always have a high, then a low, then a high, and so on. When two same-type pivots appear in a row, the strategy keeps only the more extreme one. Next, it reads the 3 most recent pivots as A, B, and C. In the bullish case, that's a high at A, a low at B, and a lower high at C. The strategy measures the down leg from A to B, then checks the up retracement from B to C. That retracement must fall inside the band from 38% to 90% of the first leg, deep enough to be a real pullback, but not so deep that it erases the move. The A to B leg must also be larger than 1.5 times the average true range, which filters out small, noisy swings. If those checks pass, the strategy projects the completion point D by subtracting the length of the A to B leg from C, giving a symmetric lower low. It then builds a completion zone around D, half a width set by roughly 3/4 of the ATR on each side. It also verifies the structure stays intact. No bar after C is allowed to exceed A, and the setup must remain fresh, completing within 25 bars of pivot C. Now the entry. The strategy signals a buy only when a bar dips into that completion zone and then closes back above the D level as a bullish rejection candle. At that point, the expert advisor enters long. The stop loss is placed just beyond the reclaimed bar's low, offset by a fraction of the ATR, and the take profit is set at 1.8 times that stop distance, a fixed reward-to-risk ratio. The bearish side is the exact mirror image. A low at A, a high at B, a higher low at C, and a projected higher high at D. The strategy signals a sell when a bar pokes into the zone and closes back below D as a bearish rejection candle. Only one position runs per magic number, and the brokers stop and target manage the trade to completion. Let's read the meta editor code on screen. At the top are the inputs. PivotLeftRight sets how many bars each side define a swing. Here 3. RetraceMin and RetraceMax hold the allowed B2C retracement from 38 to 90%. Zone tolerance ATR sets the completion window. Minimum leg ATR filters small swings. Stop ATR multiple sizes the stop, and reward ratio at 1.8 sets the take profit relative to that stop. Now the buy block. The completion level D is computed by subtracting the A to B leg from pivot C. The strategy then checks 3 conditions together. Tagged, meaning the bar's low dipped into the completion window. Reclaim, meaning the close came back above D. And bull bar, meaning it closed above its open as a rejection candle. Only when all 3 are true does the code call trade.buy. The stop sits below that bar's low by a fraction of the ATR, and the take profit is the entry plus the reward ratio times the risk. The sell block mirrors it exactly. Here D is pivot C plus the A to B leg. The bar's high must poke into the zone, the close must reclaim back below D, and it must be a bearish candle. When those align, the code calls trade.sell, with the stop above the bar's high and the take profit the reward ratio times the risk below entry. Same symmetric logic, opposite direction. Let's walk through this chart candle by candle. On the left, price prints a swing high. That's our pivot A. From there, the market slides lower over the next couple of candles, carving out a swing low. That low becomes pivot B, and the distance from A down to B is our first leg, the A to B leg. Price then bounces. It climbs back up but stalls below the earlier high, forming a lower high. That's pivot C. Notice the strategy checks this retracement. The bounce from B up to C sits comfortably inside the allowed band of 38 to 90% of the first leg, so the structure qualifies as harmonic. With A, B, and C confirmed, the strategy projects the completion point D by mirroring the first leg downward from C. On the chart, that projected level is the gold dashed line at 1.0825, the long completion. Now watch the middle of the chart. Price rolls over from pivot C and pushes down toward that completion line. The next candle dips right into the completion zone around 1.0825, tapping the level, but then it refuses to stay down. It closes back up as a bullish rejection candle, reclaiming the completion level. That is exactly the confirmation the strategy waits for, and the buy entry marker prints on that candle. The stop loss is tucked just below that bar's low, shown by the stop marker beneath it. So risk is defined by structure. From there, price turns and works higher. Candle by candle it grinds up, away from the completion line, until it reaches the take profit marker. Because the target is set at 1.8 times the stop distance, the reward outpaces the risk on this example. That completes the long trade, a mirror of the downswing that finished at the symmetric D low. Now the chart sets up the opposite case. After the rally, price pulls back to a swing low. That becomes pivot A for the short. It then rallies to a swing high, pivot B, giving us an up leg. Price eases back to a higher low, pivot C, with the retracement again sitting inside the healthy band. The strategy now projects D upward, mirroring the A to B up leg. That projected level is the red dashed line at 1.0924, the short completion. Price then pushes up into that zone. The candle at the short completion pokes into the window near 1.0924, but closes back down as a bearish rejection candle, reclaiming below the level. The sell entry marker prints there, with the stop loss placed just above that bar's high. Price then rolls over and slides down to the take profit marker below, once more at 1.8 times the risk. Both examples show the same core idea. Measure a leg, project a symmetric completion, and act only when a rejection candle confirms the turn. Of course, not every setup behaves this cleanly, and losing trades will happen. This is an illustration of the logic, not a typical result. So that's the Harmonic Symmetry Reversal Expert Advisor. We covered how it reads 3 alternating swing pivots as A, B, and C, how it projects a symmetric completion point D, and how it waits for a rejection candle that tags the ATR zone and reclaims the completion level before entering. We looked at the code for both the buy and the sell side, and we walked through a long and a short example on the chart, including the structural stop and the fixed reward to risk target. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses are part of the process. If you found this helpful, please like the video, subscribe for more MT5 strategy breakdowns, and leave a comment with strategies you'd like us to explore. Learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.